Good morning, good morning, good morning. Welcome to the Morning Blast with myself, Mr. Michael Brown. It is Tuesday, the 25th of February. Get the legals out the way. Nothing discussed in this space session constitutes trading or investment advice or infers any kind of endorsement by PIQ Global Limited, Traders PIQ or PIQ Suite, or indeed the hosts, which, as you know by now, is the amazing Mr. Michael Brown and myself, Mr. Ryan Hazy. Good morrow, my dear friend. Good morrow.
Good morning, Ryan. Good morning, everyone.
Morning. You right?
I am, yes. I'm a bit mixed emotions this morning. Very pleased that crypto has proverbially shat the bed as the market has opened this morning. But slightly frustrated that it seems Tom Talks Cars has survived the night despite his flu.
Wow. So basically, you're happy that a lot of people are in pain, and you're unhappy because one particular person isn't in pain.
That's about right. Yeah.
You're just an evil bastard.
Oh well.
Right. On that note, what's been occurring, my dear friend?
Oh, what has been occurring? Where are we? Let me get my notes first of all. Yes,
God.
it was.
Hang on, I'll tell some jokes.
Oh God, no! Please don't. I've got my notes now, thankfully. It was not the best or most auspicious start to the week yesterday in terms of risk appetite. We did have some decent intraday gains early on in the session, although they fizzled out rather rapidly, with the S&P closing down by around about 0.5%, the Nasdaq losing just over 1%, with both of those closing at the lows and extending that downside in early trade this morning. Of course, this comes amid continued jitters and nervousness over the state of the US economy, sparked by the somewhat softer than expected data that we had stateside last week, and also comes ahead of the most important earnings print that the world has ever seen after the market close on Wednesday, with Nvidia reporting. But in all seriousness, I do think that report is somewhat capping sentiment and just giving participants little incentive to be stepping in to buy the dip now, given the huge risk event that we have on the horizon in about 36 hours' time. That haven demand has, that risk aversion has filtered through into haven demand elsewhere, with treasuries advancing across the curve, the 10-year yield slipping by 3 basis points yesterday and trading another 5 basis points softer this morning, well under 4.4% now. And the dollar also advancing against pretty much all major peers. The dollar index trading up to about 106.75 at the highs yesterday and equaling those highs overnight. And of course, gold notching fresh record highs as well. Although I must admit that the yellow metal does look to be getting a little bit exhausted, even if the bulls do seem to have the upper hand.
They've had real rates have been a bit of a helping hand, and the dollar as well. So I think it's a bit of my own personal opinion, and obviously we know I like having a big old shit on the gold bugs, but it does feel like the reasons why it's been grinding higher all seem to be evaporating at a similar time. So yeah, one to watch. Be careful if you are long.
Indeed, it could well be losing its shine. Right, in terms of in terms of catalyst newsflow and data from yesterday, the only data of note was the latest IFO sentiment surveys out of Germany. The business climate gauge printing at 85.2 in February, pretty much unchanged from where it was in the month of January, and all the other metrics were broadly unchanged as well. Of course, that data does not reflect the results of the German election, given that only happened on Sunday. That was well after the survey period closed. Nevertheless, on the election front, of course, the Union and the SPD are now going to be engaging in formal coalition talks, which they want to wrap up by Easter. Nevertheless, Friedrich Merz is apparently in negotiations with Olaf Scholz, who is now a caretaker chancellor, to increase defence spending before a formal coalition deal is reached. This is according to Bloomberg sources. It seems like the Germans are looking at creating a quote-unquote special fund for military spending and for further aid to Ukraine. This is effectively a way that would allow them to bypass the debt brake, which would mean that they could enact this additional spending by a simple majority in the German parliament, which they obviously have, and not needing that 2/3 majority, which they don't have, in order to tweak the debt brake. And apparently this emergency defence spending could come to as much as 200 billion euros, which
Issue them
is,
bonds.
I was going
Issue
to say,
them
that's
bonds.
a hell of a lot of Bund issuance on the way if that number is anywhere near accurate. In terms of other bits and bobs from yesterday, we did hear from a few central bank speakers. The ECB's Wunsch, he was saying that they mustn't sleepwalk to 2% interest rates, which is exactly what they're doing because they're going to deliver another 25 basis point cut next week, and we can all ignore what he is saying. We also heard from the BOE's Dingra yesterday. She was saying that the UK is already at a high level of policy restrictiveness, and that in her view, gradual cuts are not a pace of 25 basis points once per quarter. I'd also add that gradual cuts are not what she wants to do, which is cut by 50 basis points per meeting, but never mind. Incidentally, Dingra was reappointed to the MPC yesterday. She's been given another 3 years, so we'll be having to put up with her nonsense until all the way through to August of 2028 now. Other bits and bobs are in the tech sector. Apple, they're going to add 20,000 jobs in the United States. They want to invest $500 billion in the States over the next 4 years, and they're also going to start building some of their AI servers in Texas. Of course, this is after President Trump met Apple CEO Tim Cook last week and was also threatening to throw a whole host of tariffs on the firm. So they are deciding to build in the USA instead, which is, of course, pretty much the aim of the Trump administration, to be completely honest. Sticking with Trump, there are a whole host of headlines from his meeting with Emmanuel Macron, or Macron, as he's calling him, last night, but none of them were of particular interest. What is of more interest is Bloomberg reports overnight that the Trump administration are seeking to toughen up some of the Biden administration's chip controls in terms of what can and can't be exported to China. The US in particular is looking at some tighter controls on NVIDIA chips going to China. And interestingly, they are also trying to urge Japan and the Netherlands to be aligned with the States on these restrictions. That's of particular importance given that, of course, ASML, who make the machines, who make the chips, they are a Dutch company. So you can throw as many export restrictions on the chips themselves as you like, but if they can get the machines to make the chips themselves, then there's kind of no point. So it's interesting that they are trying to coordinate things a little bit more. And just lastly, in the AI space, Anthropic, who I believe make Claude, who I quite like. Claude. He's very good. They have finalized a $3.5 billion fundraising round, which values the firm at $61.5 billion. And last but by no means least, one of the domestic equity story here in the United Kingdom, BP, according to Reuters sources, they're going to scrap their renewable goals and return a focus to fossil fuels, which is what they should have been doing all along, to be honest with you. And it should not have required pressure from activist investor Elliott taking a 5% stake in the firm to get them to do this. They're also scrapping this year's EBITDA target and going to set a percentage growth target instead. Of course, BP have got a strategy or capital markets day later on this week, and it will be interesting to watch what they have to say there, particularly as they may be also announcing the divestment of their lubricants division at that meeting as well. And that is pretty much it from me for now.
Thank you very much. Just on Claude and Anthropic, I did see a tweet by, I believe it was their CEO or one of the senior guys there yesterday. They just released a new part of it. I'm not going to try and get technical. Tom Talk Cars is listening in, just point and laugh at me. But yeah, basically a code focused element, and apparently it is the dog's bollocks. That's a technical term for you, those of you that aren't aware of the AI lingo.
I was going to say, is that how they describe it in their marketing?
Well, I paraphrased somewhat, but yeah, it's close enough. So obviously that's going to aid their the valuation, no doubt. Anyway, thank you for that, Mr. Michael Brown. Quickly before I move on.
Oh, sorry. Actually, can I just make one last point? Literally, because I've just had this headline pop up on my phone. It is about 10 minutes old, but obviously I'm talking to you. On the subject of German issuance and the defence spending, the spread between 10-year bunds and 10-year swaps is now at its most negative on record at -5 basis points, which sounds very technical, but effectively what it means is the market is basically just bracing for a fuckload of issuance to come its way.
Yeah. Bracing for bunds.
Exactly
that. So before I move on, quick shout out to obviously Cam, who unfortunately no crypto blast at the moment due to he is having a sex change. Well, he's not quite, but yeah, we'll just go with that. We'll run with that. No one's going to question it. Also, big shout out to obviously Zach, who no overnight news roundup because he's on fucking holiday again. So it's a disaster this end. But thankfully, the likes of News Squawk and Andrew Hart are still about, and I can nick some headlines from them. So firstly, a few interesting tidbits from Andrew Hart's overnight, morning report, which is a very good read. US dollar reached the most overvalued level in history last month, according to the Bank of America. Institutional investors reduced their tech stock exposure at the fastest pace since July 2024, before the August crash. That's in the last few weeks. So it doesn't bode well for your tech names. Quite an interesting quote here, or an interesting little fact. Since 2005, the amount of gold discovered declined by 50% every 5 years. So the question is, are we running out of new gold deposits? US companies, their 30-plus day delinquencies jumped by 29 billion in Q4, the highest in at least 8 years. Over the last 5 quarters, delinquencies have risen by 8 billion or 38%. So one to keep an eye on. So this from News Squawk now. Tariffs and trade. US President Trump said they're on time with tariffs, and tariffs are going forward, while he added that they're on schedule, moving along rapidly. Furthermore, he said all they want is reciprocity, or whatever that is. Well, can you say that?
Reciprocity.
Reciprocity. That
there
one.
We got there in the end.
I'm from Somerset. I'm not built for long words. And the US will be liquid and rich again. Mexico. Obviously, if we remember yesterday, there was news that Trump has basically ordered Mexico to put tariffs on Chinese goods. Mexico is studying tariffs on China in a bid to strike a deal with the president. While Mexican President Sheinbaum said she sees agreements with the US by Friday, and that Mexican officials are currently in Washington studying possible China levies. So it looks like they're bending the knee to Trump. The EU expands its tariff list in President Trump's looming metals trade dispute. Regarding the email that went out to federal employees from Elon Musk said last night that, subject to the discretion of the president, employees will be given another chance, and a failure to respond a second time will result in termination. Obviously, through the day yesterday, there was plenty of agency heads saying they don't need to reply, and there was some legal action kind of being threatened. I'll be honest, if you can't make 5 bullet points of what you've done in the previous week, I don't care what job you got, you probably don't deserve to be in the job. If you're being precious over it, what have you got to hide? Am I being silly here? Or,
no, you're absolutely spot. Sorry, I'm giggling because I was scrolling through the internet while you were talking, and I saw a little thing come up saying that Rachel Reeves has declared she's got the experience and would make an excellent pope. But yes, you are.
Sorry. When you said I'm scrolling through the internet and a little thing came up, I was like, hang on a second.
Oh God! Oh dear!
What
but no, you are absolutely right. On that 5 bullet points thing, you are spot on. But I would say that it's probably a sign of. I would be a little bit more benevolent and would say it's probably not I wouldn't blame the workers. It's probably a sign of poor management that they haven't been asked to do this on a regular basis anyway.
Yeah, exactly. But if you're sitting at home, your feet up, stroking your cat, I missed
Tom Talks Cars.
But anyway. Yeah, exactly. Yeah, exactly. Right, moving on. Anyway, crude oil futures kept afloat after the prior day's gains as markets digest Iraq supply geopolitics and fresh Iranian sanctions. Back to US President Trump, he's commented on Truth Social that he wants the Keystone XL pipeline built and suggested he would run through easy approvals. That'd be quite a crucial little pipeline going through there. That's been on the cards for about 30 years. Spot gold pulled back overnight after having notched a record high yesterday alongside the risk aversion. Senior Israeli officials told Axios that the abductee deal is on the verge of an explosion. Poor choice of words. Against the backdrop of Israeli PM Netanyahu's decision to delay the release of the 600 Palestinian prisoners, although talks are underway to find a solution before the return of the 4 abductees. Put your teeth in, Ryan. On Thursday, US President Trump said he could end the war in Ukraine within weeks and would be willing to go to Moscow in an appropriate time, but added that May the 9th may be too soon for a visit, and he would go to Moscow if things get settled. Obviously, my dear friend, Mr. Michael Brown, was talking about Macron just now. French President Macron said Europe is willing to step up to be a stronger partner and do more on defense, while added the strength of the US re-engagement is a source of uncertainty for Russian President Putin, and noted he is willing to provide a security guarantee to Ukraine. I'll note that he also said France and the UK will be providing the security guarantee. I'm hoping he consulted Keir Starmer before he said that, but there you go.
Well, they're meeting on Thursday anyway, aren't they? So
yeah, exactly. One interesting thing on this, if we remember when Trump went over everyone's heads and went uber aggressive on trying to get a peace deal sorted, like last week, it feels like last year, but it was last week. European leaders completely threw their toys out the pram and said, "How dare he go go above us? How dare he cut us out?" Now all of a sudden, the French president is over there saying, "Oh, this is great. Him getting re-engaged is, a shot in the arm to peace deals." It's funny how things turn out, right? And how quickly people can turn.
Yeah, although I think sorry, I was just going to add on that. I think it has become a little bit more nuanced, because I think when Trump started, as you say, sort of going over everyone's heads, I think it was very much a case of, you're on your own, we're doing nothing at all. I think the position has softened a little bit to, fine, Europeans will put troops on the ground as the peacekeeping force, but the US are going to back us up if shit kicks off again. Is the position I think Macron and Starmer are trying to push.
Yeah, no, absolutely, but the thing is, this is how Trump works, right? He goes in with a shock comment or shock action, gets people to listen, and then kind of rolls back and kind of does what he actually wants to be doing in the first place. But yeah, we saw it with tariffs, right?
Yeah,
shock, like Colombia, right? Here you go, 25% tariff. Two hours later, the president's sending his own plane over for some migrants.
Yeah, exactly.
So it's all part of the game, but it's just the way that the Germans and that were like, "Oh, how dare he kind of talk about peace without involving us?" Next minute, they're running to him saying, "Oh yeah, great deal, Donald. Yeah, we'll be involved." That's pathetic. Anyway, EU and UK are set to discuss a Europe-wide defence fund. Obviously, maybe we'll be issuing some more gilts there, not just buns, amid fears of a US pullback, according to the FT. It was separately reported that Germany is discussing the 200 billion emergency defence spending deal, which obviously Michael Brown just spoke about. And finally, for me, this morning, Poland scrambled some aircraft to ensure airspace security, after Russia launched strikes on Ukraine, while all of Ukraine was reportedly under an air raid alert as the Air Force warned of Russian missile attacks. I believe this is the fourth day now that basically the whole of Ukraine has been overnight been hit with significant numbers of drones and missiles. So maybe it's a final flurry of activity, hopefully before we get some peace in the area. But anyway, enough from me. Back to you in the studio.
Good stuff. Thank you, Ryan. In terms of today, then, another light data docket presents itself at 10 o'clock this morning. We have the latest Eurozone wages figures from the ECB. Very tough, of course, to imagine this moving the needle in terms of monetary policy with, as I mentioned, a 25 basis point cut on the cards next week. Meanwhile, from the States today, this afternoon, we have the latest consumer confidence figures from the Conference Board. Their index expected at 102.5 in February, down from the 104.1 seen in January. The figures will be of perhaps more interest than usual, given the slump that we've seen in the University of Michigan's consumer sentiment gauge over the last couple of months. It will be interesting to see whether this data backs that up. And also at 3, we have the Richmond Fed's manufacturing index figures, which will feed into expectations for the ISM manufacturing PMI figure due at the start of next week. But just be aware that figure does tend to drop a minute or two early from the Richmond Fed. In terms of other bits and bobs to keep an eye on, we do have 5-year supply from the United States today at 6 o'clock this evening. That follows a pretty solid 2-year auction yesterday, which saw the auction stop through the when issued by 1 basis points, and also saw record direct demand. So clearly enough people out there wanting to buy treasuries at these levels. In terms of central bank speakers, we are due to hear from the Fed's Barkin, Barr and Logan. Logan, the most interesting of those, speaking in half an hour's time on the Fed's balance sheet. We're also due to hear from the ECB's Schnabel and Nagel, that's easy to say, as well as the Bank of England's chief economist, Hugh Pill. And lastly, earnings today. The most notable release comes before the market open from Home Depot for the American contingent out there. But of course, that comes ahead of the biggie, which is Nvidia, after the market close tomorrow. And as usual, another day of headline watching likely awaits, despite the relatively quiet data docket. And that is your lot from me this one.
I'm just thinking, did I put it up in the old Jumbotron? Yes, there. I can't, no name dropping, but Pepperstone slash our dear friend Westy put out a very good NVIDIA earnings preview. So give that a read if you can. Definitely worth a read, because as Michael said, like it or lump it, it will be a significant market event. And there you go. Mr. Michael Brown, thank you so much as always. A shout out to Ryan who's listening at Forex Flow. Check them out.
So, I thought you were giving yourself a shout out for a moment there.
Oh, well, maybe. Shout out to Tom's Talks Cars, because he's up early tomorrow because we've got a big release on PIQ. So I'm going to try and get in his good books for the rest of the day. But rest of you, see you later.
Bye.
Bye-bye.